Welcome to the Gold and Silver Report for December 2nd, 2025. My name is Ron Guth and I will be your host today as we examine what is happening in the gold and silver markets. Today, December 2nd, gold closed at $4,205.40 per ounce, down $25.20 from yesterday's close. This quote comes from Kitco.com and represents the bid price at the closing of the New York market. We use the Kitco bid price because that is the same figure that is used on all of their handy and useful charts. The recent record price for gold was $4,376.62 set on October 16, 2025. News articles about gold were fairly sparse today, probably because the price remained flat. However, one headline stated specifically, "Gold-silver sell-off on profit-taking from shorter-term specs." That was barely true for gold, but not for silver, which not only survived any sell-off, but actually went up it went up 47 cents on the day to a new record price of $58.39. As always, you can find nuggets of valuable information in otherwise speculative analyses. For instance, Niels Christensen of Kitco News wrote an article titled "Silver Prices Holding $58 and Saxo Bank's Ole Hansen Still Sees Upside Potential." Ole Hansen is the head of commodity strategy at Saxo Bank in Denmark, and he attributes the rise in silver to, quote, "a deepening and widening disconnect between physical availability, a favorable macro backdrop, and a market structure exposed to a squeeze," end quote. As we noted yesterday, there is an imbalance between silver contracts and physical silver. This has resulted in a more than 100% rise in the price of silver, which Hansen notes is, quote, "their best annual run since 1979, end quote. We'll do a little sidebar here because I was an active coin dealer during the 1979 to 1980 silver boom, and I got to see firsthand exactly how the public reacted to the run-up in the price of silver. However, that run was almost completely artificial because of the attempts by the Hunt brothers to corner the silver market, which is completely unlike what is happening today. The story about the Hunt brothers is a whole nother story, and one of the days in the future we'll go into that. But the point is that the current run-up is real. One other tidbit from Neil's article is that Hansen notes that silver has been immune so far to Trump's tariffs because silver is viewed as a monetary metal. However, if silver becomes taxed as an industrial metal, which is actually another one of its characteristics, who knows what will happen? Probably affect the price negatively of silver. Yesterday, we talked about the impact of potential Federal Reserve cuts in the interest rate. Hansen points out, which is a clarification that I wish I'd seen yesterday, that lowering the interest rates will lower the opportunity cost of purchasing silver, which means it makes it easier and less expensive to buy it, which will be a positive for the price of silver in the future if those rate cuts actually take place. In another article by Christensen, he mentioned micro gold futures. These are similar to ETFs, or electronically traded funds, in that they allow smaller investors to buy in at an affordable price, since micro gold futures are only 1/10 the size of a normal 100-ounce contract. This democratizes silver and opens the metal to a much broader market, also a positive for the future price of silver. Now, how significant is this impact? The average daily volume at micro gold futures increased by 235% year over year. This indicates that people are frantic to buy silver. They're scared. Take a look at the national debt clock. As you can see here, The U.S. national debt in the upper left corner is $44.5 trillion, for which every American man, woman, and child is on the hook for $124,000, $124,867. The interest on the debt is nearly $1 trillion annually, and as you can see, all these numbers are only going up. Finally, Jeremy Zaffron of Kitco News interviewed Clem Chambers, the CEO of Online Blockchain PLC, and you can actually read this article and see the video on YouTube, a very interesting video. Chambers is quoted as saying, quote, "This isn't the real squeeze. Silver is going a lot higher. $95 is where I sell," end quote. That's a pretty impressive prediction. Like many others, Chambers sees individual investor demand as the real force behind the rise of silver prices. He says, quote, "Sovereigns don't care about silver." Now, what does that mean? It implies that silver is the poor man's or individual investor's metal. And that seems to be the case when you look at the micro gold futures and their huge increase in the average daily volume. Now, will silver go to $95 an ounce? It's certainly on its way. In my opinion, the only thing that can kill it is if the high price of silver pulls silver out of the woodwork, just as it did in 1980. At some point, either the supply will increase or demand will drop. And when that happens is anyone's guess, and you better have a chair when the music stops. In the meantime, enjoy the ride. Thanks for joining us today, and we hope to see you in future podcasts. Please consider helping us grow the channel by subscribing, leaving a like, sharing, and post a comment in the section below, and we'll do our very best to answer your questions. See you in the next one.